Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello and welcome to Top Stock Picks here at Zacks. I'm Ben Rains. Today we begin by diving into a stock that helped start one revolution in the beverage market and is now at the forefront of the next one. That stock is the Boston Beer Company, which trades in the ticker SAM, S-A-M. Boston Beer was one of the founding fathers of the craft beer revolution, and today its portfolio includes Samuel Adams, as well as Dogfish Head and some other craft brands. But the stock has soared because of its push into the booming hard seltzer market that it helped popularize. Shares of SAM have climbed 150% in 2020 against its industry's 9% decline and the S&P 500's 12% jump. This is part of an even more impressive 3-year run for the stock that's seen it climb over 420%. Boston Beer launched Truly Hard Seltzer in 2016 and Truly is one of two dominant players in the category alongside White Claw. The success of Truly in the hard seltzer category has forced all of the giants such as Anheuser-Busch InBev, Molson Coors, and others to dive in with their own offerings under some of their flagship brands such as Bud Light. The market is so hot and has so much potential that even Coca-Cola is set to enter under its Topo Chico brand seltzer. Reports projected the global hard seltzer market could reach $14.5 billion by 2027, expanding at a compound annual growth rate of over 16%. And Boston Beer's founder has called hard seltzer the biggest thing since light beer. If we look back, we can see Truly's impact on SAM's revenue, when it jumped by 15% in 2018 and 26% in 2019, after it slipped slightly in 2017 and 16. The company's sales then surged by at least 30% in the first 3 quarters of 2020. And if we look ahead, Zacks estimates call for its sales to skyrocket 50% in Q4 and the first quarter of 2021. Overall, its 2020 revenue is projected to climb by 40% to hit $1.7 billion and then jump another 32% in 2021 to $2.3 billion. Both of these would mark Boston Beer's strongest growth as a public firm. Meanwhile, SAM's adjusted earnings are projected to climb 63% this year and another 56% next year. Boston Beer's impressive earnings revisions help it land a Zacks ranked number 1 strong buy right now, alongside an A grade for growth in our style score system. SAM stock sits about 15% below its recent highs at around $940 a share, which might cause some sticker shock. That said, SAM trades at a discount compared to its industry in terms of forward sales, at 5 times forward 12-month sales versus industry's 16 times, despite crushing the beverage market this year and over the last several years. Therefore, some investors might still want to consider buying Boston Beer stock, especially since the hard seltzer revolution is really just getting started. And that does it for me, and now I'm going to send it over to Jeremy Mullen.
Hello everyone, I'm Jeremy Mullen here today for our Top Stock Pick segment. Today's pick is Zebra Technologies, ticker symbol ZBRA. The company is the industry leader in RFID barcode scanning and tracking solutions, and the stock is a Zacks ranked number 2 buy. Zebra owns 40% market share in handheld devices and over a 50% share in Android inventory management devices. The company's portfolio includes barcode printing, mobile computing, data capture, data platforms, software services, and supplies. Zebra was founded in 1969, has 8,200 employees, and is headquartered in Lincolnshire, Illinois. The stock has recently hit all-time highs at their stellar earnings report, so let's take a look at that quarter. On November 3rd, the company reported 16% Q3 beaten revenues came in above expectations. Additionally, Zebra guided the next quarter higher, seeing Q4 at 370 to 390 versus the 329 expected. CEO Anders Gustafsson had some comments on the quarter. Quote, demand for our large strategic customers continues to be at record levels, driven by accelerated trends to digitize and automate workflows as a result of the pandemic. While demand through the channel is recovering from peak global macro pressure that we saw in the second quarter. Our strong order backlog, sales momentum, and encouraging pipeline of business gives us confidence in a strong finish to the year. End quote. Citing that idea that COVID is accelerating e-commerce and workflow digitization, Bard analyst Richard Eastman maintained his outperform rating on Zebra. The firm raised his price target from 280 to 320 after the quarter. Now looking at some fundamentals, the company has a market cap of about $19 billion and a forward PE of 30. The stock has a Zacks scale score of D, but a value score of B in momentum. And Zebra has a 40% of that barcode printer market share versus 12% of the second largest player. So it's one of the biggest players in the space. And COVID has been a tailwind for Zebra as companies rush to modernize to help them get them through the pandemic. Additionally, Zebra has a technology to track and roll out of the vaccines. And I saw actually Jim Cramer tweet about that idea this morning. So we'll see where that goes. Looking at more at earnings, the company has beat expectations 7 of the last 8 quarters, so they have a great track record. And analyst estimates are headed higher, with the current quarter jumping by 12%. Additionally, the current year's estimates have jumped 6%. Stock is up about 40% on the year, but there looks to be more meat on the bone. So let's look at some technical analysis. Okay, now looking back to this chart for most of the year, we bottomed out in the March sell-off at 150 and gradually went higher and continued to hold the 200-day moving average, which is this red line. Now we sold off back in September, gradually came up, and you can see this gap here was the nice earnings report that fueled the stock higher. Sold off a little bit, but had a nice pop. So I have targets above at 380 and also above 400, but for those that like to buy pullbacks, I would track the 21-day moving average, which is this green line, and this 50-day. It would actually be nice if we have to see a big market sell-off or something like that. If you want to buy the dip on this, track the 50-day and this gap fill around 300. If we can't get down there, it's understandable. The stock is very strong. There's a lot of things going for it. You could nibble in here and target the upsides around 380 and a 410. That's it for me and my top stock pick, Zebra, ZBRA. If you like this video, please go to zacks.com/promo to get a free book on finding number one stocks written by Executive Vice President here at Zacks, Kevin Matris. Thanks for watching, guys. Talk to you later.